What's popping, people? Solnal is coming up, so this will be the last video for the next couple of weeks. This one is for those of you who've settled down proper and expect, for better or worse, to be here until your career expires. You're watching Sekkider, and this is Retirement Funds 101. Now before we continue, I'd like to ask that you take a second to like and subscribe to the channel and share it with your friends if you think that they might find it useful. Otherwise, feel free to share your experiences with us or suggest any financial products that you know of in the comment section below. Finally, we'd like to remind you that this channel is meant for educational purposes only and is by no means meant to replace legal or financial advice from professional advisors, whether paid or otherwise. This episode specifically will deal with the very particular group of bank products that may or may not fit your life plan, so be sure to think hard on whether or not these options are right for you. Alright, now let's get to it. Alright, so whether you're already in a fund or not, if you intend to live in Korea for your retirement and throughout, there are designated retirement funds at your disposal. These funds, unlike standard TDFs or index funds or mutual funds that you can find on any bank app, are actually tax advantaged. This means that you're able to get a fixed return on your fund contributions based on the amount of money that you've deposited to the fund over the course of the year. Specifically, these funds allow you to redeem a tax credit of 15% on any contributions made up to 4 million won per year, meaning that you could get a maximum amount of 600,000 won returned at the end of the year. You can still contribute more than 4 million, but you won't be able to secure a tax credit for any amount that exceeds that 4 million limit. Now, the name of the fund category that we're looking at today is the 연금저축펀드. And while most standard funds are available to us through our bank apps, foreigners looking to secure a 연금저축펀드 must do so in person. Doing so requires you just to go to whatever asset management place that you would like to open your 연금저축펀드 with and bring your ARC. This is because Korean tax laws dictate that tax credits are based on residency and not nationality. So as long as you're a Korean resident, you should be able to qualify for the account. So, let's go over the pros and cons of having a 연금저축펀드 so that you can make a more clear decision of whether or not you want to look further into them. Pro. You get a 15% tax credit at the end of the year on deposits up to 4 million won. Con. Foreigners must remain residents to maintain the account validity unless they maintain a comprehensive income in the Republic of Korea. Pro. Preferred low taxation rate from 3.3 to 5.5 when the fund is received as a pension. Con. Penalty exceeding credit return rate for breaking the fund early at 16.5% for those who remain residents and 22% for those who decide to leave. Now there are exceptions to this case, so you might want to look them up if you will continue to do business in Korea without actually living in Korea. Alright, next, pro. They're actively managed, so your portfolio allocations are taken care of based on your expected date of retirement. Con. They're actively managed, which means the fees are usually between 1 and 3%. Finally, pro. You're locked in, so you may not be able to make any cognitive errors such as taking out money when the market is down, since you would have to pay an extra fee on top of that, and you would be penalized twice essentially. And I'm gonna zoom out so that you can take a screenshot of that. Alright, so while this is a solid investment vehicle for a lot of people looking to live here long term, and the tax credit is really quite tempting, there are drawbacks to putting your money in a retirement fund that's structured in the way of many traditional mutual funds. Now, I don't know if I've expressed clearly my personal views regarding mutual funds so far on this channel, but you'll definitely have to do the math when considering whether paying fees on the fund's returns and the fund's performance in the markets would be enough to make them more worthwhile than simply indexing consistently over the same amount of time. Now, if you're a foreigner and your partner is a Korean citizen, it may be beneficial for them to apply for the fund since it's much likely easier to maintain overseas resident status for native-born Koreans when compared to people living here on visas. Also, there's very limited information on these accounts in English, so if your Korean competency isn't particularly high, it may be difficult for you to give these products a good enough read-through to know whether or not they're even right for you in the first place. If you are still interested, then I'll leave links in the description box below to some of the relevant pages from major providers, but the Woori Bank actually has a dedicated page for retirement pension plans that I'll do a quick read-through of now. Now, Woori Bank makes a case for personal retirement pension plans with reference to the OECD and World Bank's recommendations for life in retirement. At the base of the retirement plan pyramid is the national pension. We covered this topic in a previous video, and while the expected payouts for these pensions are livable, they are also quite modest. So if you want to do more than just survive on the money that you're provided, you may want to add to it. Which is why we have the next level. The next level being a retirement pension. This refers to an additional retirement pension plan, whether it be corporate or personal. By making constant contributions over the course of your career, they'll provide you with enough income to maintain the quality of life that you aim to have when combined with the national pension returns. Then finally, you have the annuity. An annuity is basically where you give an entire lump sum to a bank or asset management firm, and they agree to pay you a set amount of money every month of your life until you die. The larger the lump sum, the larger the monthly payment. Ultimately, annuities work kind of like insurance in that the companies themselves are betting on you not cashing in as much as you deposit, because if you do, anything that they would pay back to you is out of pocket. It's kind of morbid because basically what you're doing is betting on your death, but for a lot of people who don't want to have to think about money after retirement, it may be a good option. Now, the Woori Bank page is specifically selling a plan for companies to provide retirement benefits to their employees through a defined benefit plan. Some form of retirement plans, whether a DB or a DC, which is a defined contribution, or an IRP, is legally mandatory for any company to provide. If you want to know more about the retirement benefits that your company provides, it's important to ask. If you go on Reddit, there are occasionally people talking about how they found out that their company is not even providing them any retirement benefit plan just because they've asked a question, and this is really important for you to know whether or not you're new or you've been working at a place for a long time, because they do necessarily legally have to provide you something beyond their contributions to the NPS. Usually it'll come in some form of a severance pay whereby you'll be given a lump sum upon quitting or retiring, but they do have to have some form of compensation. So again, make sure that they're putting away something for your severance or for an actual defined retirement plan. In any case, if your plan is to live in Korea until you die or find a way to put your brain into a computer chip, it'll benefit you to start thinking about what kind of retirement savings you'll want to have. If you're okay with simply receiving your national pension dues, that's completely fine. But recognize that the amount that you'll be making will be enough to house, clothe, and feed you, but not much more than that. And just because you get a tax credit every year doesn't mean that it's the best option for you. So, as with everything on this channel, make sure to take a deep look into the products that we're talking about before you commit to joining. Finally, if you do want to set up an account, remember that you have to either visit in person, or I do know some companies like Meritz Asset Management will be willing to meet you where you live if you live outside of a major city. So you can always call them and let them know that you want to set one up, and then when they send somebody out, they can call you, set up a time and place on where to meet, and you can do it that way to save you the trip from maybe going to another major city if there isn't one readily available to you. Alright, I hope that information was enough. I'll leave a link to some related retirement fund pages in the description box below, so make sure to check those out. Otherwise, stay informed. We'll be taking a very short break over the holidays, but we'll see you very soon. Take it easy.